right time, maybe too late.
Are you recording everything?
Makeup.
Sorry.
Yeah, everything is recording.
Okay.
There are red lights everywhere.
Oh my God, could you imagine?
It's happened
I would do something like that. I'd be like, and great podcast. We're recording now.
Well, so the reason it threw me off was we're not on StreamYard, right? Or
no, we are. See,
we are.
There's a little record button there.
Well, so maybe because we don't have the online guest. It's not, those pop-ups aren't coming from the group chat.
Oh yeah, I don't know why it's not coming up.
Okay, all right, so that's why I had to check.
But yeah, it's recording. And welcome back to the Riley Black Project, Crystal and John.
Hey, I got distracted by a cord.
It
happens in like seconds.
Yeah. Okay. Well, distraction's easy.
I know. So shut up.
So this episode is brought to you by
Monarch Pine.
Oh, she got it this time.
10% off her Etsy with code Riley Black. monarchpine.etsy.com.
And we have a very informative podcast.
Yes.
These do very
Hi,
well.
Katie.
Sorry. Okay. Well, Katie with the Gallo Group is here.
Hello. We promise it won't be boring. It's about accounting, but it will not be boring.
I mean, I was honestly shocked how well the first one did. Not that it wasn't informational. It was so different than our normal, like, interviewing someone who has a super successful business and, they did it by making one post that, you know what I mean? It was way different than that. And so I was worried about, like, would that translate over? I thought it was interesting, but would, like, our viewers and listeners, right, find it, like, interesting and helpful? And they did. And they're like, oh, I want more of that. And I was like, oh, really? Okay, good.
I love the response that you got to the questions. Like, I saw so many, like, enthusiastic and excited people to hear about an accounting podcast. I was like, oh wow,
right?
That's very optimistic to see for me.
Sure. Right.
Well, I feel like it's something a lot of people struggle with, and then you have a small business.
Huge pain point.
You're putting some money away, but is it enough? Is it too much? Is it not enough?
Yeah, you're kind of just throwing shit over there and saying, hope that's enough.
Yeah, exactly. And we'll see.
Right.
So is it the right? We're in December. Well, this airs. Yeah, December, almost mid-December. Yeah. Is it too early to be talking about taxes? Is it like right time, maybe too late?
Are you recording everything?
Makeup?
Sorry.
Yeah, everything is recording.
Okay.
There are red lights everywhere.
Oh my God, could you imagine?
It's happened.
I would do something like that. I'd be like, and great podcast. We're recording now.
Well, so the reason it threw me off was we're not on StreamYard, right? Or
no, we are. See,
we are.
There's a little record button there.
Well, so maybe because we don't have the online guest. It's not, those pop-ups aren't coming from the group chat.
Oh yeah, I don't know why it's not coming up.
Okay, all right, so that's why I had to check.
But yeah, it's recording.
All right, awesome. So as far as it being the right time or not, I think this is actually if you're not monitoring it all year, if you're going to start checking the pulse of your business, right now is a really good time, because you have until January 15th to make any tax deposits that you need to be penalty free. So it gives you at least a month of notice if you have to make a deposit, but hopefully this is something you were monitoring and kind of staying on top of all year, but a very good time to kind of do a year-end audit.
And so what is that deposit? What purpose does it serve?
So it basically penalty proofs you from late payment. So this is actually something that a lot of people don't know, is that your minimum tax liability is actually due by January 15th.
No,
a lot of people think it's not due until you file your taxes.
Right.
But filing deadline and payment deadline are two completely different things. So if you do not pay at least what's minimally expected from you by the IRS by January 15th, you will incur a late payment penalty. It's not a huge amount.
Right.
So for some people, it's worth
it
being able to take the extra about 3.5 months
to
pay the balance. So for some, and depending on how much you owe, you know, that could work out for you. But I'm always a big proponent of at least making my clients aware in December what they could be owing. And if we're not making quarterly estimates, at least just catching them up to the minimum.
Right. Okay. Cool. So what you got? Jump right in, because I did send you some of the questions from our listeners, and they had, a couple things, and you just had a really good idea of like, the kind of like top 5 things or whatever. So what did you prepare for us?
Yeah, absolutely. So something I feel like I have found in these past kind of 2 years of navigating more of this area of cash flow struggles with business owners, I find that they become very overwhelmed with the aspects of their business that they need to be looking into.
Yeah.
So that either ends up in them focusing only on one and allowing the others to kind of
just
not be
off.
looked over, or it causes them to focus on none of them and kind
Mhm.
of just not really have a strategy when it comes to their business.
Yep.
So I've been kind of working on how to highlight the most important areas for business owners. And I figured the best way to do it would give you only one hand, 5 things
Right.
that you
Yes.
have to worry about, that you can count on every single one of your fingers to make sure, did I cover this here?
Yeah.
And those 5 things for me that are the most important are your income, your profit, your taxes, your owner's compensation, and your operating expenses. So having a pulse on each one of those areas of your business and understanding if what you're doing in each of these areas is working for you.
Right. So I guess what's one of your kind of first few things?
So yeah, we can just jump right into it. So as far as, these 5 functional areas, as I call them, they are really the segments of your business that either promote your growth or your sustainability. So where I like to start when we're breaking everything down is like the first one I said is in your income. And what that encompasses is your everyday lifeblood of your business. You need money coming in every day to support yourself, to support your operations. And the questions that I would consider everyone to start asking themselves at the end of the year would be, were your sales goals met? Were your revenues up from last year? Were they down? And figuring out why that was. Did you not push as hard? Did you change your products or services?
Did you move 2 hours away?
Did you have, a life event happen that hindered you from really pushing your sales as much as you did? So just really getting curious and understanding why those things may have happened, reflecting on your best selling products and services. What did the best? What did not so great? Maybe dropping off those not so great products to focus on the well-performing ones. So getting a pulse on that, evaluating your pricing strategy. Where are you in compared to your competitors? Where are you compared to the market?
Right.
If you're under these areas, why that is it justified? Are you making the profit margins to justify that? Or are you underpricing yourself?
Right. So we just did the kind of deep dive into everything, which we can either get into this now or later, but we've been shifting more to the profit first evaluation, which is good for me because it kind of gives me like a bunch of little like buckets and stuff to deal with. But I did, the evaluation of like subscriptions and that kind of thing. And it kind of reminded me, oh yeah, that's right. I don't want that one anymore. Or, oh, I did want to look into this other company. It also, I reevaluated my pricing. I compared my products that other suppliers have and their pricing, and I saw that I was either at the same or I was charging more. And I knew that I absolutely did not want to go down. And the people who were charging less were not necessarily like, I guess in, not my competition, but like, I don't want to work for that, or just that doesn't make it worth selling for me personally.
Because you still need to meet your margins,
exactly.
No matter what anybody else is doing.
Right. And they may have different margins, and that maybe that's all that they're doing, and they don't have to, meet so much, or they're it happens only now.
Yeah.
All the time.
Right before we start recording.
It's like it gets stage fright or something. But yeah, they just probably have different bills that they have to pay. They probably have less overhead or that kind of stuff. And so, looking to make sure, okay, at least I'm like around there, and okay, keep my prices the same. It kind of sucks. I was almost like hoping that it was a little bit lower so I could just, get that extra boost, but increase things by $1 or $2. And it's like, no, I don't know that will necessarily turn the turn into profit that I would hope that it would, because my pricing is about right on right now. But it also did show me that some of the stuff that isn't selling, it's kind of taking up space. Should I maybe try? Does it need to be discontinued? Do I need to talk about it more? Do I need to? So that's something I'm going to focus on next year, is because I do have like 315 different like variants on, of products on my Shopify. Does everyone know that those 315 things exist? And is that why it's not selling? And if I'm talking about it more often and it still doesn't sell, okay, is this something that I really want for that time that someone's looking for it? Or could I use that space for something that actually is moving and selling? So
yeah. And sometimes like having too many options like that could even be a hindrance to you, because there's so many components.
There's
to
one
focus
supplier
on.
that I honestly, it's overwhelming to me because there's too many choices. And so it's like, for me, it's like, thankfully I don't necessarily need their product. So it's not really a hindrance for me or, for them. But if I did need to purchase something, it gives me anxiety, because it's
absolutely.
like trying to choose, and did I miss something? Is there, was there something that would have been perfect, but I just can't find it? Or, you know what I mean? And so,
and take that struggle that you're having with that supplier and apply it to your own product range and say, is the same thing happening to me over here? I really liked the idea that you said earlier, where you're like, I'm going to see how I can group these products together. How are they going to be meaningful in groups? How is this best going to serve me? Because grouping them and making the options a little bit smaller, that's going to work better for you, because you can focus on the smaller components more than a bunch of ones that may be different. So yeah, that's a very good strategy to kind of simplify and compartmentalize, so you can really focus on those and find out what's performing well, what's not, what you may have to discontinue, what you have to innovate.
Speaking of all things laser, check out Houston Acrylic at houstonacrylic.com for reliable laser tested and laser approved materials.
Made for makers by makers, Houston Acrylic features over 450 styles of acrylic sheets. With over 50 new arrivals being released this month, Houston Acrylic is committed to bringing new and innovative styles to the laser community. My personal favorite is the matte. Anything matte. And I feel it's perfect for everything.
Don't forget to save 10% by using our exclusive coupon code TRBP10 at checkout. Get inspired today and visit houstonacrylic.com.
Do it.
Hey there, podcast listeners. How great would it feel if this was the year you finally got to escape your 9-to-5 to embrace your lifestyle of creativity and entrepreneurship?
Every Wednesday at 12 p.m. Eastern, Eon Laser USA invites you to join the Freedom to Create webinar, where you'll learn how to make this a reality.
Join leading laser industry professional and brand ambassador Emily, aka That Mom with a Laser, and Eon Laser USA's sales manager Alicia as they dive into all things Eon.
Learn about the advantages of owning an Eon Laser and get the scoop on Eon's rewards and partner benefits. Plus, get a glimpse at how everyday people who started out with zero experience paid off their lasers, scaled their businesses, and transformed their lifestyles.
So if you're ready for a lifestyle change, head over to eonlaser.us/whyus and sign up for the Freedom to Create webinar today.
Thanks for listening. Laser on. Cool.
Yeah. So that's great. And I liked that you brought up pricing too, because a lot of people are afraid to bring up their prices.
Pricing is so difficult. It's almost like more difficult the more you know. Like I recently, someone reached out and actually wanted like a physical product, and I'm so out of the practice of pricing those, and it's so hard, especially when it's something new. It's like, I don't know how long this is going to take me. I don't know if I'm going to, are there going to be any struggles that I run into along the way? I was trying to buy something like an accessory to go with it, and I was pricing that out, and they're only available in like 8 to 10 quantities. And I'm like, okay, I buy that accessory that I need for that sign, and sure, I get 10 of them, but I only need 2.
Right.
And so now that thing that I just bought is literally almost the price that I'm about to charge them. And so now I already made 0.
Right.
Like, not technically, because I have 6 to 8 more or whatever, so it was like the struggle of like, I want, this business, it'll be good content, it'll be all the things that come with it, but then it's like, am I charging enough? Am I not, am I charging too much? Because then like I had a price in my head, and then I went and looked at Etsy to kind of like help compare, and they were so much lower, and I was like, oh, okay, well, let me look at a couple things. And so I had to find
you have to evaluate the value
sweet spot
that you're bringing to the table, because as long as, your price can really be anything,
right?
As long as you're bringing the value that justifies that. And that value is not always added to things by monetary things. It's your expertise, it's your time that you're spending.
It's the brand behind it.
Oh, it's that what is that ship, the story about like the guy who shows up to some ship, and they had been going through this issue for months and months and months, and they couldn't figure out what it was. And he went up and he took one hammer and he like tapped 2 things, and he was like, oh, you need this part, whatever, that'll be $20,000. But the part was like 100 or 200, right? And they're like, well, so why is it, $20,000 when it's a $200 part? And he is like, my 20 years of experience taught me that $200 part is necessary, and I found it in 2 minutes because of that 20 years of experience.
Exactly.
And so that needs to go into your pricing as well. Like,
absolutely, because what that contractor is thinking of is, okay, when I fix your ship, you are going to be able to bring in 4 times, 5 times,
it's the value they bring you as well
of what I'm charging you. So don't discount what my service is going to bring you moving forward.
Yeah.
So it's that kind of mindset that gets us out of that scarcity, and that, oh my God, I just want people to work with me, so I'm going to charge you whatever I want, to understanding and feeling confident in your value and saying, this result that you want, that you have come here to me for, you cannot get without me.
Right.
And that is why my price is the way it is.
Right.
And trust me, that is a struggle to get people to see the value in what you're giving them, because it's not a product that I sell, it's a service.
Right.
And it's hard to translate the value,
because you can't really translate it without showing them.
Without showing them. And then without having buy-in from without having buy-in from the participant as well, because I'm sure what you guys have learned in working with me is it takes just as much effort from you guys as it does for me, for us to really come together and have a result that we're proud of.
I don't ask the questions, you can give me the numbers, and then that's what they are at the end of the day. Like, we just, before this, we actually went over, and it was like, oh, your advertising went up, but I'm like, I don't know that it actually did. And so then we'd go through, and we're gonna like deep down, through each thing. If I just left it, I wouldn't actually learn things about my numbers. They wouldn't work for me if we don't work together.
Right, because we wouldn't be looking at the correct things. We just wouldn't be looking at the correct information. So that's why I'm always super transparent with my clients about what's happening in their financials. You can deep dive on anything. You can ask questions about anything, because the more accurate I have your numbers, the better information that I can give to you. So that's always, there. And with the pricing thing, there's a tactical way for kind of us to evaluate what your return on investment is with these products, because we can evaluate your costs that you're putting in a tactical way that we can put on paper. We can evaluate your time in a tactical way that we can put on paper for you to understand, okay, this is the cost for me to bring whatever this product or service is to the market, and for me to make the margin that I need to, that matches your goals, at least 50% or above, hopefully. This is what I need to charge for it. And this is how many people I need to buy it. So you're giving yourself these easy goals to say, okay, I have this easy price and I have this easy sales goal. So let's get down to business on it. A lot of people don't even know that. They're just like guessing.
Just throwing shit at the wall.
And then maybe once they get with someone who does help them with this, they're disappointed. And they're like, oh my God, I've been underselling myself for so long. Or they might find out that they're up in the game, and that you're up and you're good, and you have maybe extra investment opportunity that you're not taking advantage of. So it's always just good to know, as far as your income, how it's working for you and your pricing, and if that is compensatory to the value that you are bringing and putting into that.
Attention all laser owners and crafters. Are you tired of spending hours cutting, painting, and assembling laser products? Look no further than Crazy Laser Dad Laser Ready Blanks.
Their high-quality blanks are expertly sourced, tested, and ready to use with your lasers. Say goodbye to the hassle and frustration of time-consuming projects and hello to more time creating and selling.
Plus, with their wide selection of items, you'll surely find the perfect blank for all your customers.
So, what are you waiting for? Visit crazylaserdad.com today and take your laser crafting to the next level with their laser-ready blanks.
Welcome to the revolution in laser engraving. Introducing Lens Digital, the creators of the game-changing Pyburn rotary attachment. With the Pyburn 4.0, you can turn ordinary cups, tumblers, glasses, and more into extraordinary masterpieces.
Looking to engrave niche items or want the functionality of a chuck rotary? Look no further than the Pyburn Grip, Lens Digital's chuck-style rotary. With a range of different sized jaws, you can easily engrave a wide variety of items. All Lens Digital products are compatible with most CO2 and Galvo lasers and were designed specifically for the laser industry. All that paired with the best-in-class customer support, Lens Digital is your one-stop shop for all of your rotary needs.
Transform your laser engraving game with Lens Digital, where makers succeed. Unleash your creativity today.
And don't forget, we are proud Lens Digital affiliates as well. If you're shopping, code Riley Black will take $50 off any order of $600 or more. So back to the value thing for you, something that I actually learned from you in taking that course on how to like market and sell and all that with the videographer side was that there wasn't like a here's my price per hour. Right. For him, it was all value based, which almost makes it more difficult because him giving a video to a brand new laser owner, it's not going to have, a branded video or whatever. It's not going to give them the same value that it would give to someone who's been in business, who has, 4,000, 10,000 people on their email list. And, it's not the same. And it could be the same video. It could be the same exact length. It could be the same amount of time and work that goes into it. Mm-hmm. That same video is going to bring this established company a lot more like return than it will for this new business, just because they're new. Right. And so pricing, he needs to price his videos in that way as well.
It also goes back to how you're saying it's two-part, right? Uh-huh. So I can make the best video for both of those clients.
Right.
If the one that is established just puts it on their website and doesn't say anything, doesn't post about it, doesn't do anything, it's going to underperform.
Right.
Where the new owner, the new business is excited, it knows they need to get their name out there.
It's all strategy.
So so they put it out there, it gets them tons of ROI, return on investment, where the other one doesn't. So it is twofold, right? And then also people just like, oh, I put the video,
because some bigger corporations could think, oh, it's just going to be magic. I put it up, you did all the work for me. That's all I need to do. And
not only corporate. You'd be imagine how many people just like, oh, well, I posted it and it didn't do anything. Yeah, but where did you post it? What time? How many times?
Right.
Did you post about posting it?
Right. And they may not know that people don't know what they don't know. So they don't know that that's where they need some additional help from you. Mm-hmm. Where it's like, okay, well, now use that as an opportunity to increase your revenues from this client, where it's like, okay, I did the basic for you. I have the same kind of setup where it's like, okay, I do the basic reporting for you, where I just put everything in and I tell you.
Right.
But do you know what to do with that after?
Right.
Right. If I just show you your numbers, if I just give you a profit and loss and a balance sheet, are you going to know what to do with that after I give it to you? And for most business owners, that answer is no. Nope. So I would say the same thing probably exists for you. Like, okay, it's like teaching a person to fish or just giving them a fish. Mm-hmm. If I just give you this video and you do whatever you want with it, it's not going to perform as well as if I give you this video and then I give you a strategy also with it. So that is, again, that value that you can just keep injecting into something. And this is my favorite thing in the world. The people who get it will get it.
Right.
The people who don't are not your people.
Right.
So that is also like very a neglected area for business owners. And in the beginning, when you're first getting started, you're taking everybody. You don't want to say no. You're not in a space where.
And I feel like that's what you should do at that time.
Yes,
is like
I agree with
you
that
kind
to a
of have
certain
to like
extent.
right. You kind of have to take those people in to learn those lessons,
right,
to figure out
Exactly.
you don't know that I didn't charge enough for my time until you take that job that takes 60 hours and you thought it was going to take 15 and things like that. You kind of almost have to, because even if you hear other people say it, at least me personally, like I'll hear it, but I don't really understand it until it like happens and it's like, oh yeah, this is what that person said. You know, so it's like you don't think about, you know, actually applying it until then. And then for me, I know people always with the niche thing, we've talked about this on the last couple episodes, is someone doesn't know right away what they want to do, and a lot of times your niche comes to you organically and accidentally. Like
agree with that entirely.
Like I never planned to do keychains and then it just kind of happened. I had to do them and then I found an easier way to do them. And then it just kind of snowballed into, oh, these are low cost. And you know, people people can buy, you can have 10 keychains, you know what I mean? Or like they're easily giftable, all those things. But it was never my intention to be the keychain thingies girl. So, you know,
and doing these audits help you identify that. They help you identify, what am I doing the most of? Who am I doing it for? And who do I love to work with?
Right.
Because that's where you want to put your energy into, what's grossing you the highest and what you enjoy doing the most.
Right.
So
that's huge.
It's not only
if
what the dollar
the same
signs
thing,
say, because there's emotional costs that are involved in things as well. Absolutely. So something could be, you know, really making you money, but if it is,
but you fucking hate it,
if you're in debt on the emotional side, it is not worth it at all. So that kind of goes into, you know, my next point of, you know, and the next functional area of business that I think business owners should be really focused on, and that's their profit. And I don't mean profit at the end of the year, what's on your balance sheet. I mean, what is the profit that you're retaining in your business over long term? Your profit of your business, it is not just that number at the end of the year that resets every year. It is the long-term health of your business. What are you actually retaining in it? So some things that I would consider people to ask themselves about this area would be, you know, are you evaluating what I've learned to be called the core 4 revenue ratios or revenue areas you should be looking at? And those would be monthly revenue. What were your fluctuations? Why? Your monthly cash flow. How is your receivables process? Are you getting payment as soon as you do a product or service? Are you leaving money out on the street? Are you leaving it out for too long? So how is that? How is your cash flow? Your gross profit, that is your sales less your cost of goods sold and your contractor. So what money are you left with to run your business after performing your product or service? Because it's not just about bringing your product or service to the table. It's maintaining everything after that. So how much money are you leaving yourself on the table, which is what we kind of just talked about. And then the next one would be your net profit. So that's just understanding your overall profitability. And ideally, these would be things that business owners are staying up on at least monthly or quarterly to make sure that their business is healthy and that it's at least on a sustainable track to last. And then I would also ask them to consider, what are your savings reserves looking like? Are you even saving? Are you doing that?
Which is a huge thing, especially with the market right now. And that, you know, we were talking about with our meeting before, was that this year was so just all over the place. It was super high, but then it was like just an immediate low almost. And if you don't have that general savings to kind of hold you over during that time, and if you're banking on all those high months, when there's a low month, you're gonna crash and burn.
Exactly.
So you have to find that medium space that, like, on the low months, this is gonna hold me over. On the high months, I get to put more aside as more of a cushion so that I'm not freaking out that one low month I have, or, you know, whatever.
Exactly. So like my recommendation for people listening to this would be, evaluate your savings reserves, add up your monthly expenses, average them out, see about monthly, what are you spending, and do your reserves support at least 3 months of that? That's the healthy reserve amount that you want to see. You want to be able to sustain yourself for about a quarter without any income, which is rare, but what happened in COVID? So many business owners were shocked by just their income stopping cold.
immediately. Right.
Right.
Yeah.
And the businesses that were able to make it through that were the ones that prepared for that.
Mhm.
So that would be another thing I would say to consider. And then I would also, in this area of profit, have business owners consider, is there equity in their business growing? And what
Mine was.
Yes, it was. It was.
So, well, which was good that, I mean, you know, we're in such a weird space just after, you know, the moving and the sales being so up and down, and then me kind of being up and down, like personally as well, and all of that kind of playing in together. And then it was like, you know, I had the amazing year last year that I kind of had to live up to.
Mhm.
And like, I remember when you told me, like, at the end of the year, like how well it did. And like, I immediately was like, oh my God, that's amazing. And then I was also like, oh, fuck, I can't do that again. I was like, I can't duplicate that. You know, it was like, they were both like simultaneous thoughts of like, shit, how am I going to like follow up with that? And then so seeing, you know, with just such a weird year right now, and again, it's just like hearing the Black Friday sales and how like Black Friday did amazing, and it did for us as well. But that like people weren't spending, and then Black Friday happened, and then they like spent it all, which is kind of what I did too. I mean,
Oh, absolutely.
I bought like 3 months of face stuff because it was like buy two get one free with all, like, you know,
That's
it's
when you bulk
expensive.
up.
Yeah, I bulked up on all the things that I use normally. Just I'm going to use that shampoo and conditioner, but now I just got it for 45 instead of 60 or whatever. So I did all of that during Black Friday.
You applied that to your own business as well.
And so just seeing that, but then, you know, the weird year, and I was like, ooh, how are my sales and how is everything? And it was like, it was down, but not as much as I thought. But then that equity and the assets like grew, I don't know how much, but you know, a lot. So
yeah,
like
you want to
that.
see your balance sheet getting bigger
Mhm.
as your time goes on, but you also don't want to see it getting bigger because you're taking on more debt.
Right.
So a lot of business owners don't really consider that yeah, maybe you're raising capital and you're increasing your assets, but are you doing that because of the cash that you have in your business,
Right.
or are you doing that because you're taking on more debt?
Mhm.
So I am 100% a supporter of business owners leveraging debt. I think it's awesome. I think it's a great opportunity. It's a great way to maintain a healthy cash flow.
That is something I struggle with.
Is leveraging your debt.
The few times that I've brought on debt, it gives me like it gives me anxiety. Like I know it has the power. I also know how dangerous it can be.
It's helpful and a hindrance at the same time, because it's helpful in the sense of you're not going to get crazy supported or crazy reliant on debt, but are you maybe not relying on it as much as maybe you could to push yourself forward. So we can find that there's a healthy debt to equity, debt to asset ratio that we can, you know, stay on top of, make sure you're not getting in crazy levels. But the ways that you can monitor your business on are you raising equity is, are you keeping money in the business, or are you just taking it out?
Right.
And that's what people majorly squander their equity on, is their distributions. And they just won't even, to a lot of business owners, every dollar that comes into their bank account is theirs. And what they don't consider what they don't consider is that there is operating expenses to be paid, there are taxes to be paid, and you should be saving. You don't want your business to show a retained earnings of zero, because what that tells people over time is that your business cannot hold on to money. So for the balance sheet is a very hard statement for people to grasp sometimes, but I feel like it's one of the most important, because it helps you keep a pulse on your business's health. So that is where I like to demystify that statement for my clients, in that, you know, it's not scary. It's not, you know, I'm not going to come yell at you. I'm not going to do anything. I am just helping you understand the effect of your decisions long term on your business. And that's what the profit functional area of your business helps you stay on top of is my business, how it's running now, sustainable? And if it's not, where is that
Right.
unsustainability occurring? Is it in my pricing?
Right.
Is it in my operating expenses? Where is this
Yeah.
happening? So yeah, that's the next area that I would have business owners focus on. And an actionable tip I can give to people who are maybe wanting to start looking into this would be evaluating your cash reserves and your average monthly spend, and asking yourself if what you have on the side is enough to sustain yourself for about 2 to 3 months.
Mhm.
And if you don't have that, get on a plan to start
Right.
saying, all right, then I'm going to start throwing 1%, 2%, something
Right.
small. Start with
Yeah.
anything small is better than doing nothing.
That's what I mean. That's what we just
That's
did.
exactly how we
Now
started.
was I'm not great about pulling it out for paying myself. I always just want it there in case I need to like buy inventory,
Right.
buy things and reinvest back into it. And, you know, thankfully I had the luxury when I started the business, you know, with his job, I was able to do that.
Right.
But what happened is it kind of put me in that habit. And now I don't know how to like, you know,
Or how much?
peel back. Yeah. And
We all
how
have-
much.
We all have money personalities, right?
Right.
So you're more of the like miser kind of personality where
Yeah.
you're like, I'm going to hold everything close to me.
At least for the business, not
yeah.
personal. I
Yeah.
spend all that.
All that
That's
goes.
funny
All
how
that
we
goes.
can switch with that, right?
Yes.
Because I'm
If
very
only
much
some of
like
those
that as
habits
well.
bled over.
I can be very organized and targeted and kind of like, what's the word I'm looking for? Like just open-minded about
Mhm.
my clients' financials and looking in them and
Mhm.
finding all
Right.
those things. When it comes to my own,
Yeah.
I don't want to look at them
Yes.
at all.
Right.
My
Yes.
husband does all of that.
Right.
So that's why even the
Well, I mean,
accountant has an accountant, people. Like it's
I have a
necessary.
bachelor's in finance, and I'm like, all it taught me is I don't want any parts
I
of
don't
it.
want to know
It's
this.
like that's what it told. It was like I need someone else to do this for me and to break it down, because I realized that in my first year. I mean, one of the first things and services that I hired out for was accounting, because I got to June or something of the year and I hadn't done anything. I hadn't like reconciled anything. I hadn't looked at any numbers. I had no idea. And like at the end of the year, I was like, I have no idea what to do with my taxes. I have no idea what I should pay, what I made, like any of that.
Because there's a fear
And-
in not understanding,
Well,
right?
and like, and it's for me, it's a task that I hate.
Right.
So I kept putting it off. Oh, I have all these, I'll do this and then I'll get to it. And then I'd finally like have the time, and that's not what I wanted to spend my time doing. And then, so then I finally asked my friend Mindy, and I was like, do you know an accountant? And she was like, I do. And then I reached out. And then when I heard like what the price was, it was something like, you know, when I first started and much smaller, like, you know, things to go over, it was like $150 for like the quarter. And I was like, wait a minute. So $50 a month and you'll do all this shit for me? And it was like, yes. And I could not throw that money faster. It was like, oh yeah, for the value of what it gives me, and that I don't have to deal with it. I don't have to, because even when I'm not doing it, I'm stressing about the fact that I'm not doing it.
Oh yeah. And
And
I
so
think every
it's still
business owner
taking up
is
space like in my head.
Yeah.
Yeah.
Every business owner is to some point, whether they're acting on it or not. There are some people who may have this idea that, oh, I can handle it myself, or I'm not really making that enough for me to really care.
Right.
And there's never a point where I wouldn't suggest people stay on top of this. It does.
Yeah.
Businesses that are just getting started and don't have a cent of revenue to their name yet, I am
Right.
still like, okay, what are your goals? What do you
Right.
want to make?
Exactly.
What are you projecting to hit? Because
Right.
everything starts with your goals.
Yes.
If you don't have goals, you don't have a direction. You don't
Mhm.
like, we can look at all these functional areas and I can
Right.
give you the ratios, I can
Right.
give you the amounts, but if you don't know how that aligns with how you want to do,
Right.
you don't know whether what I'm telling you or not is good or not.
Right. Yeah.
So yeah, just having the understanding and the person to translate it for you
Mhm.
is so helpful. So that brings us into the next functional area, which is probably everyone's least favorite area to talk about, and that's taxes. So that's the non-negotiable of doing
Right.
business.
Well,
Yep.
that's another thing that a lot of people also think about accounting is like, well, I'll just bring all my stuff at the end of the year
Right.
for taxes. Like that's as far as it goes to. For
Yeah,
some
thinking
people,
about
it's
it
like,
once a year instead of
Right.
thinking about it every
Oh,
quarter.
right.
Or now we've shifted even to
Monthly.
every month, because even I was starting to realize that doing quarter balancing was it was still overwhelming for me. I was still putting it off. I still had to go through, and then I had to provide, the 3 months of statements, but then I also had to provide 3 months of notes. And it's crazy how quickly something can change or
we
feel,
forget it.
yeah, like I'm like, what the hell was that $500 2 months
for?
ago? I'm like, what was that? And then it's like, then you spend all this, like you waste all this time figuring out what stuff was from 2 months ago. And then like, I was actually, we were talking about it before. I finished one quarterly, I did a 3 month, and then we were shifting to monthly. And then I did a 1 month, and the 1 month was like, it was so quick. It was easy because I literally just did it. And so all of it was still somewhat familiar. And it was like, oh, and then it also gave me a light bulb for my business. And that if there's anything that's stressing me out of, doing it or doing it well or doing it at all, finding ways to piece it into smaller pieces makes it not so overwhelming, and it will make it actually happen and happen better.
Oh yeah.
Because, it just, I know more about October than I did about back in June. Like,
oh yeah. Yeah. It becomes overwhelming when you wait. And
a lot of taxes for the year.
A lot of people think, oh, I don't have to start thinking about my taxes until January. Like you said, is this too early for us to be talking? No, it's where everything's done. So tax planning for me is not a once a year thing. It doesn't happen at tax time. Tax planning is year round. You should always have an idea on what your net revenues are and
setting stuff aside.
Exactly.
Which I
putting it aside.
started.
Every dollar of revenue that you make as a business owner comes with a tax implication. So when you get into the habit, as we've started to build now, of just putting that away, it's out of sight, out of mind. Your business is not going to rely on it, and you're putting it away to serve the purpose that it needs to serve. So when it's time to pay that, you have that ready, and you don't have to rob from Peter, your business, to pay Paul, the IRS.
Right.
And because then you're just in a continual cycle of owing your business. And that's also not a very good recipe for sustainability. So the questions that I would have business owners consider in this area for themselves would be, did the business set aside tax money? If they didn't, what are their year-to-date revenues at that point? And they can look at their tax return from last year, look at what their effective tax rate was, apply that to what their net profit is looking at. That's your number right there. Are you prepared to pay that? Did you pay estimated taxes all year like we just spoke about? Or are you going to take the late estimated tax penalty? What's going to be better for you? If you're looking at maybe under $500 of taxes owed, it might be worth it to you to just say, I'm going to wait until April to take care of this.
So we some weird noise.
They're doing stuff outside.
Oh, okay.
The lawn guys out there,
right?
they're making money. We support the small business out there.
Maria's not here, so I can't blame him.
But yeah, another huge area in the tax functional area that I think is neglected is capitalizing on missed or overlooked opportunities for deduction.
That was one of the questions that we got from
the number one question I get. Absolutely. When people just ask, like, I'll tell someone I meet in a bar somewhere, a restaurant, that I'm an accountant, and they want to start asking me their tax deduction questions right there. And I'm like, ordinary or necessary by. Like, it's the most thing that I get asked about. So what I feel like is most overlooked by small business owners is personally paid expenses that they may be paid on their personal credit card or debit card that when we reconcile don't even get captured.
So one that we need to do for us is a lot of the apps I have on my phone, because it's tied to my Apple account, it's not being taken out of my business. So I pay like, I don't know, however much, $12 a month or something to Canva.
Oh, yeah. We need to capture those.
Yeah,
absolutely.
Like my Dropbox I pay that, just it comes out of that because I can't really like separate the two easily because it's just tied to my phone. That's actually like expenses that are for my business, but they're coming out of my personal that I just don't even. Yeah.
Always ask that client, my clients, that question at the end of the year. Did you pay for anything personally that maybe we didn't capture here in your financials? So that's a huge one. Another one is home office expense. A lot of self-employed people do not know that they can write off their home office expenses. And this is, I'm sorry, W-2 workers who are working from home. I know that that's also a question I get a lot from W-2 workers. W-2 workers are not allowed to write off their home office expenses. That is as of the 2017 Tax Cuts and Jobs Act.
Wow.
But self-employed workers, yes. And there are two ways that we can write off the home office expenses, and that is with the actual expenses and a simplified method. So your accounting professional can help you figure out what's going to be the best one for you. But basically, a very simple way of putting it is based on the square footage of your space that you work in your home and the total area of your home, you'll get a percentage. And that percentage can apply to your rent or your mortgage interest. It can apply to your utilities at home, that your power, your internet, anything.
Because think about how much power.
Oh yeah, that laser I'm sure uses a lot of your utilities. So thinking about that, how much energy output we can figure out kind of a percentage maybe just for that.
Right.
A lot of things that people just kind of don't even consider. That's a huge one that I would say people need to make sure they're looking out for. And then there's a lot of kind of specialty deductions available for small business owners, like SEP IRA accounts, those retirement accounts that you're able to contribute to as an employee of your business, but your business is also able to contribute to it as well in a tax-free way. So when I see a business who is in a healthy net profit range, and the question that I'm asking is, how can I minimize taxes? That's the first question I'm asking is, do we have a SEP? And are we contributing the maximum amounts we can to it? Because I would much rather you put that money into a retirement account for you than giving it to the IRS, because that's what's going to happen to it if you don't take advantage of that.
Yeah.
So if you're an S Corp owner and you don't have a SEP, set one up.
Well, and I mean, it's something that neglected that I think us small business owners don't think about is, okay, sure, you're making money and you can afford to live now, but you eventually want to stop working and you don't want to like work forever. You would love to retire. Do you have money set aside for retirement? Like all the money I have for retirement now is all money or pensions or, retirement accounts that I set up while working in the corporate world. And so while they're still there and like, one of them still like growing and whatever, but I need to start contributing to that. I need to act. If I did it in the corporate world and I was, putting money into my retirement, I need to do the same thing.
Absolutely.
Here.
100%.
And even if it's $5 or $20, if it's more than zero, and we know how quickly that stuff adds up. So that's another thing we gotta add in.
Yeah. And that's tax deductible. So it's like you're paying your retirement in a tax deductible way. Exactly.
It's kind of easier to think about it when you're in a corporate world because when you're hired on, they ask you those questions.
Part of it. Yeah.
And you
they
answer
make it very
them,
easy.
and that's it. You don't think about it anymore until it comes when you need. You're like, how much was in there?
Right.
And then they're matching it for you typically because they're taking advantage of that retirement deduction on their end.
Didn't even think about that.
So you don't think about it when you're running your own business. Like, I got to put something away for retirement. Yeah,
for sure.
But you don't think about it that way, as like you were saying. I got to continue like I was when I was working, corporate.
Right.
And I'm all for diversification. Like, I'm not saying all your extra money should go into retirement. Like, but maybe it should go into something that maybe is going to make you more money. So another opportunity to deduct money that you're paying to yourself would be in payroll. If you're an S Corp owner and you're not taking a payroll, you're out of compliance with the IRS. So, and that's also another way to lower your taxable income that you're taking from your business. And with that money that you're paying yourself, if you're someone who wants to invest in real estate, include a stipend for each out of each paycheck for yourself to invest in some real estate. And if you don't want to put it in a retirement or whatever. So, just making sure you're taking advantage of every one of those tax deduction opportunities that not only is going to lower your tax bill, but provides some sort of benefit to you as well. It's not just what the situation that makes me crack up the most is like, oh, I have a profit, I'm going to just go spend it on a bunch of stuff.
So that was actually my next question was in the groups. You see a lot of people in November and December say, what new machines should I buy because I have, X amount of money to spend, or basically because they're trying to reduce how much they pay in taxes. And so how does that work? Is that a good and solid thing to do sometimes? Like how?
And what about timing as well? That's
Right,
another thing. Like,
So it
it's right
depends.
now.
It depends on what your goals are, because every business should have some sort of net profit goal that they want to end with. I want to end with 20 grand or a percentage of my revenues. They should have some sort of target.
Right.
So if you are at the end of the year and you're closer at your target, there's really there's not much to do if you want to, stick to your goals. But if you have wiggle room within your goals, I'm all for making investments into your business, especially if they're going to be dollar generating investments like a new machine.
Right.
But a helpful tip to mention to people in the sphere, if you're buying machinery, if it's over a certain amount, usually I use the price point of about $1,000. But another consideration to make is if you're purchasing something that is improving the revenue generating aspect of your business, so like a laser machine, that's actually considered an asset to your business. So you wouldn't expense that in the year that you purchase it. You would add it to your balance sheet as an asset, and then you would take annual depreciation on that item as an expense. So if it's an item that qualifies for special depreciation, you might be able to depreciate the whole thing in that year and take the expense. But if it's not, you only get to take a chunk of that for over the lifetime of the asset. So I would make sure before somebody purchases something, they understand the tax deductibility of it. Okay, I might buy this $6,000 machine, but can I write off $6,000 of it in that year? Probably not. So that's why I always say for people when they're at this year-end spot to check in with their accounting professional before making any decisions like that to make sure it's in your best interest.
And how does something like, so there's things like, well, if you bought an Eon laser now, you put the money down, but it's not going to be delivered for 3 to 6 months.
Right.
So how does that play into it as well? Because part of the money went out in 1 year, and then the machine didn't arrive until the next year. So how does that?
So like as far as the way it's going to play out on your financial statements, what you're going to see is that you're just not going to have the return on investment in the same year as purchasing the item. And we all kind of know that when we make these investments, it takes a little bit to get a return on investment. It's not like you buy a new machine and then all of a sudden you're
making all this money
the next day you're at $10,000. And sometimes it may happen like that.
Good for you.
Good for you if it is. I'm happy for you, and I want to talk because I want to figure out what you're doing. But usually it takes a few months to see the return on investments that you're making. So when you're making those asset purchases, again, just reconnecting to your goals. And is this purchase I'm bringing a new service or product to my roster that I've wanted to do that resonates with me, that my people want to see?
Doesn't make sense.
Then go ahead, because what you can evaluate before purchasing something like that is, what am I going to be able to do after purchasing this? How much am I going to charge people for it? And how many people do I want to charge? And you can give yourself a little bit of a projection of, all right, I'm going to pay $5,000 for it this year, but it's going to make me $25,000 next year. Good investment. But if you look and it's kind of breaking even more than you'd like it to, maybe consider that's maybe not a great investment for you, or you haven't figured out the best way for yourself to make that investment.
True. Yeah. Kind of like the new thing we bought.
The new thing that we bought is coming in.
Coming soon. Coming soon, the new thing. But yeah, the actionable tip that I have to offer you guys on that is to check your tax savings account. Are you saving? If you don't have anything set aside, allocate a percentage of your year-to-date income into a separate account, because you want that money to be out of sight, out of mind. I am the kind of person that if I see money there, I feel like that is my budget and I will spend all of it.
Mhm.
So anything that I don't want spent, I will need to move to somewhere that I'm not going to see it. So that would be my main thing to do for people who are struggling with taxes. If you're finding yourself every time you get to tax time, your accountant tells you how much you owe and you're like, oh my God, where's that money?
Right.
That
Where am I
means
gonna
you
come up
are
with it?
spending
Right.
it. You are spending your tax liability. So if you recognize this about yourself, it is a very common thing that people do. It is, you are not alone. You are not weird. You are not a bad business owner at all. You are a normal human being. And what you just need to do is harness that habit of saying, okay, if I see it, I'm going to spend it. Let's get it out of here.
Yeah. Right. Well, and that's part of, I mean, the profit first kind of practice. I'd highly recommend it. Like, look into it. Like, if all you do is read the book. If you actually need someone to help you do it, like we know a few people.
Yep.
And just having those, it's kind of like budgeting. If you ever like heard of like the home budgeting with like the envelopes and like that kind of stuff.
Absolutely. Built exactly
the same
on
kind
that.
of process. And one thing I was struggling with, with the banking, when profit first came around, there wasn't the banking industry didn't align with it because I had attempted, I remember trying to open a business savings. I was shocked that like they told me no. I'm like, wait, what do you mean? I can't, like, I wanted a savings account for my business. And it was like, oh, well, we'll just set up a second checking and you can make it like, call that your savings. And I'm like, okay. And I did that.
I was like, what did they
this
have you
makes
set
no
up?
sense. And literally, I mean, I lost money, not like a lot of money, but like I had like $500 sitting in my my savings account, again because that was the requirement of the checking account that was a savings, and it sat there and it didn't grow anything. Sure, it was there and it was nice to have, but like even growing, I remember putting everything. I use Relay now mostly for those like envelopes and buckets, and I remember moving over just it was under $1,000 into two different accounts, the profit account and the taxes account. And I think I forget which one gains interest. Do they both do on?
I believe
Relay?
so.
I think
Yes, because I think I
Yeah.
had you set up both of those accounts as savings accounts. Yes.
So I remember just seeing like it was a month that went by or something, and that money was sitting there anyway. I'm not touching it. I don't even really look at it because it doesn't do much until I add to it. And I got like $1 or $2 in just free money. And like, I mean, sure, it's only $1 or $2, but like it's $1 or $2 more than I had the other 6 months that it was just sitting there.
Yeah, and
so
they were probably charging you a fee to have the account open.
Right.
Yeah,
totally paid a fee because it was like something happened where I think I had I transferred enough to, I thought it was 300 or something. I thought it was 400. And then I got a fee because no, it was 500. I'm like, okay, well then I transferred enough to make sure that there was 500. And then I got another fee. And I was like, wait, like you told me, right. I'm like, you told me it was 500. I put 500 in there. Why did I get another fee again? And they're like, oh no, it's a $500 daily average. And so those few days or whatever that were under 500, like I got penalized for those few days. And she was like, so you should probably have like $550 in there so that it's averages out to 5. And I was like, all right, this is bullshit.
Yeah.
So
you're like, okay.
I'm like, nah, I'm done. What was that bank account that you told
It
me
is a
about
game.
that was all online? Because like I have 3 accounts that have $0 in them currently, and I'm not getting penalized.
Yep.
I have 2 accounts that have just a little bit, and I'm actually gaining something instead of so. And it sucks. I wish I would have switched to like Relay, because I just switched bank accounts, and if you've ever switched a bank account, you understand how fucking annoying it is.
Absolutely.
Because like purchasing,
It's terrible.
do you have my new account number? Do you have my new
your automatic payments?
Yeah, I just switched everything over, so like I'm keeping one account with them just for pure like
convenience
because and it almost kind of makes it so that like that one account, okay, that's where everything goes into, and then I funnel from there.
Yeah.
And I put it into those little buckets into the free online banking. It's called Relay. I think I already said it, but I love it. So if you need any information, let me know.
Yeah, I've been getting really good feedback about my clients that are using them as well. It's really easy for me to be on the same page as you.
Yeah, well, and you can see like, you know, certain, I think limited, I don't know what all you can see, but like you get to see that full picture as well. And that goes into,
I can see everything, and I
you
can
haven't
even
been saving enough in taxes. Let's put some more in there, or you know, that kind of stuff.
And I can even help you with the transfers at that point. Like if we're getting to a point where you're like, this is rinse and repeat. This is really easy. I'm ready to just kind of give it to you, and you just do the transfers whenever. That I have that capability as an account user on Relay too. It's very friendly to this methodology. And what I like a lot about it is it's an online bank. So it's not, there's a difficulty of access to it in that sense. And like, you can't go and walk into the branch and withdraw money or deposit it. Right. You have to do the transfers, but that helps you keep it out of sight, out of mind.
Right.
So I will recommend my clients, especially ones who are cash involved. If you're collecting cash and need to go deposit cash at a bank account, I do recommend having your income account being something you can access, being some sort of brick and mortar financial institution, but then leveraging those online accounts for your savings purposes, because it gets those funds out of your distribution account, which is your income, where you're allocating everything to. So you'll know when you're looking at that income account, this is what I have to send everywhere. And you're not kind of confusing yourself with all the balances.
Just like you said, you know, if I have several $1,000s in my regular account, my brain thinks, oh, I have all of that to spend on something. And it's like, no, you have your monthly expenses. You have all those things that are also coming out of that same thing. You need to, it's not the full picture of how much you have to spend.
And where we set this up with you, which works really well with kind of how your behavior is geared towards money, is when you do make your allocations, what's left is what you have to spend.
Right.
You can spend all of it, or you can spend whatever you're saving is what you're saving. So that gives you that clarity that you're looking for, to say, I do want to just look at this number and say I can spend it. So that's the beauty of the system that we've done, is once you make those allocations based on our predetermined percentages, you know that this is what I have. And it's really easy for you to gauge if it's enough or not.
Man, that is a lot. And we don't normally do this.
No.
But we're breaking in halfway. We're at the halfway mark.
Yeah, I kind of felt it. I knew, like, she's too easy to talk to.
Yeah,
and she has so much like good information.
Right.
So
I mean, we covered in this next half.
Right.
We cover a lot of ground.
Yes.
So it's a lot. So we want to end it now.
Yeah.
To give you guys some time to let
absorb,
that sink in.
absorb all of that. Don't want you to, fall asleep during your holiday, because people are busy right now. And so
and also to
let's break it into, like I said, some part in the episode. Let's break it up into some bite-sized pieces.
If she hasn't said it yet, she'll say it in the next episode.
If I didn't say
next part. But there's a lot of stuff there, and we don't want anything to be missed,
right?
Because of
we don't want people to fall off. Oh, I don't have time for a 2-hour episode or whatever. I mean,
it's a lot of information, so it's like it can fall through the cracks,
right?
So that was the first half of our conversation. So stay tuned next week for part 2 of a good conversation. It seems to be a crowd favorite.
Yeah. So, I can't wait to have her again.
Right?
After you watch the second half.
Right. You'll see why. And that's been another great episode of the Riley Black Project. Crystal and John.
Bye.
Mamie, we're all done.